What's up, everybody? DeFi Afterparty here, and I have some tickets for you today. We're gonna talk about the DEXFI Treasury bonds. We got some important announcements about it. Recently, they have done or created essentially an affiliate or referral program with that. AJ, I got AJ on the line. AJ, say hello.
Hey everyone, glad to be here, Christian. Always a pleasure, my friend. Excited to go into all the updates on bonds for sure.
Cool, cool. Let me actually connect my wallet because um otherwise we can't see like the affiliate thing. But while I'm connecting, why don't you talk about the affiliate program as I'm bringing it up?
Yeah, absolutely, brother. So we've always tried to scale bonds in a very healthy and sustainable way. And so how we were originally doing that is through what we called a white label service, where we would essentially duplicate the bond infrastructure, the back end, and a front end website, but it would still have to be separate. So that added a lot more management, a lot more development time, a lot more um, potential, roadblocks in terms of scaling. Because obviously it's great if we have, five or 10, but if we had 100, it would be impossible to manage. So we said, hey, let's go back to the drawing board. The white labels were cool, but we really just need to implement a true affiliate program. And so here we are, man. We have now essentially merged all of our white labels into this new affiliate program. And now moving forward, anybody that brings in new TVL, they're able to get a cut of the yield. So again, for those that are familiar with bonds, it's a 70-30 split. On the yield, 70% goes to all the bondholders, 30% goes to um, DEXFI. And of that, again, it pays for development and vaults and, some escrow payments from, some of our earlier repayment funds. But the whole idea is that there's plenty of yield to go around. And so now, rather than having to divert the yield further, affiliates can get a portion of that. So rough numbers, for every about 10K that's referred, it can be up to $100 a month reoccurring, and it's super sustainable because again, it's based on the yield. Usually, when you talk about affiliate programs, you're getting, 10 levels deep. It's more of an MLM, a multi-level marketing structure. And it really hurts the protocol because you're getting paid off the top for deposits. With our affiliate program, it's based on again the yield. So the better bonds do, the better, the affiliates do. So we're really proud of it, and we rolled it out just a little under a month ago, and we've had literally probably two or 300K in new TVL from the affiliate program. So it's super, super bullish. And ultimately the whole goal, whether it's through just organic growth or affiliate programs or anything else, is that we want more TVL in the protocol. The more TVL in bonds, the better it is for everybody involved.
So I'm not going to hold you to these numbers, but this is just for rough numbers here. So if let's say I brought in one user, no. Let's say I brought in like 100 users, right? 100 investors, right? And that turned into 100 grand. Isn't that what you said? 100K? You're muted, AJ.
Thanks. Sorry about that, Christian. Yeah, so we can do it based on 100K. Yeah, 10K, 100K. Again, the number, it's a percentage base, so it'll be the same outcome. But yeah,
Let's work with 10K then. 10K.
perfect. 10K. Yep.
So 10K you said would basically return as an affiliate commission, like roughly $100, correct?
Yeah, so again, not to hold me to that, but assuming APR is about 100%, and the current fund value, all that again, it would be roughly $100, and that's again reoccurring. So you're paid once a week, when we do the top up, but yeah, you're looking at about $100 a month, reoccurring from just 10K.
Cool. Now, every time I do a video, I want to bring something to the table. I want to give you guys the tickets that you might not be thinking about, right? And here it is. So let's say, let's just cut this even in half. Let's say it's 5K. 5K equals $50 recurring. Remember, this is just estimates. This is rough numbers here. This all depends on the yield on the APR from the bonds. But
For sure.
let's just say it's even 5K. That could be five people depositing $1,000 each, or $1,000 worth of bonds. Um, that could be 10 people, doing what is that? What did I say? $1,500 worth of bonds. You get the point. The thing is it'll add up over time. Some of you watching this video might be like, hey, I know like five investors. Or some of you might know, I know 20 investors. Some of you might like, I know one investor that is down to just throw in 10K right now. Who knows? But the thing is if you're getting a recurring commission, right? Let's just call it to $50. This is what I want to point out. This is what most people miss here. Currently, at the time of recording this video, bonds are $42. This means that, let's say this $50 recurring was monthly. That means every month you basically are able to buy a bond. And why is that important? It's important because you're basically compounding the bonds. And I think this is a very important thing to understand. I don't know how to spell compounding compounding bonds, right? This is very important because remember, and this is a little bit of education on the bonds. If you're not familiar with how these things work, you come and mint a bond or you buy a bond, right? Roughly at this time, the point time of this video, it's $42.86, right? You come and you spend that. It is now staked, auto staked here. You have one of them, just like I do in this wallet. Every day, I get USDC paid out because of this bond. Depending on what this APR is and how big your position is, will dictate how much USDC you get. But you got to think about it like, hey, if I'm doing the affiliate program here and I'm getting $50 basically as a commission, I can then essentially go buy one bond a month at the current price, which then just keeps building this up and up and up. Now, if you are a crypto user or even a semi-experienced crypto user, and you understand how the crypto market works, how it's very volatile, up and down, up and down, up and down, you'll see, or you'll come to understand that right now the current bond price is $42.87, but when the market goes up, this value here of one bond will also go up. So if you think about this in a long-term way, you're stacking bonds right now, right, by using affiliate commissions that is giving you more USDC per day. And in the future, if you just keep repeating this process, compounding your money back into the bonds, in the future, it is likely that the bond price is going to go up. At the highest point I ever saw, AJ, it was around $250. So let's just say that's basically a 5x from where it is now. So imagine you buy a bond right now for $50 or so, and it goes up to 250. You 5x'd, and at the same time, your USDC or your rewards will essentially 5x as well. And if you want to get out at any time you want, you just come over here, click redeem. You tell you would click this button. You would say, I want to redeem, one bond or whatever it might be, and then you can sell your bond. And if your bond is $250 at that time, well, guess what? You just came up because you bought a bond at 50 that is now 250. And that is what is exciting about the DEXFI bonds and the affiliate program. What do you think, AJ?
Yeah, Christian, that was an amazing overview, bro. And yeah, I mean, again, utilizing the affiliate program to actually build your bag is that's the alpha right there, man. So yeah, and again, not only everything you just said, but remember you're also earning along the way too. So again, as you're continually getting more and more bonds, you're continually earning, that APR. And I think we're going to get into it in a minute, but the APR that's displayed right now is based on the current price. So when bonds double or triple, even if the APR is relatively the same, that means that your true APR is double or triple because your cost basis was buying bonds at the very bottom. And so again, that is even more pouring gasoline on the fire in terms of your winning and earning and principal. So yeah, I love it, man. Again, the all the tools are here to win, and that's what we're really excited for with bonds is that, and we've been doing this. All these numbers are in real time at what arguably is, the worst sentiment in crypto history right now. So that just shows me that we have something special with bonds that will only, in theory, get better when, volume and crypto interest increases as well.
100%. And if I was to bring somebody new into crypto, AJ, a friend, a family member,
For sure.
maybe somebody I just know on Facebook or whatever, the first thing, once they're onboarded, once they have money onboarded from a bank account to their MetaMask or their Rabby wallet, would be like, look, I just want to keep it simple, and I just want you to learn. I want you to deposit, watch it, and learn, right? Because you just need to get started making money. That's what you're here for, right? So I would just say, look, come over to DEXFI Bonds. You're gonna get $45, $46 in your wallet, keep some for gas. You're gonna come here, you're gonna click one, you're gonna click mint, and boom, you're in the game. It's like that is so easy, right? And that's why
Totally.
this is why it's the easy button.
Yeah, totally, Christian. Again, just to reiterate on that, I mean, we've all been in the crypto trenches long enough that, I know that even for me personally speaking, it's always been hard to recommend crypto projects because a lot of time they're around a token. And now if the token goes down, and again, it always seems like that is the case no matter how healthy the market is. As soon as you recommend it to a friend, the token, drops in half, right? So we've all been there, we've all done that. Well, with bonds, again, because there is no token, other than, the blue chips and very high level alts that we have exposure to, in the LPs, you're earning real yield as if it were a business. And so that is a fundamental difference in, speculating on a meme token that your friend told you about, or actually getting involved in the real infrastructure of crypto. And again, bonds are earning from every single swap or transaction that happens on the DEXs, whether the tokens go up and down in price, as long as there's volume, we're earning. And as you can see right there on the home screen, we've done about $6,000 of profit over the last 24 hours. Half of that's compounded to protect principal, and the other half is paid out as yield. But all that is so again, for lack of a better word, bullish or exciting for new users because it really is the easy button. It's a great first intro to crypto, and allows you to, what I like to say is earn while you learn, right? You said that a little bit, where again you can then have a home base where you're earning real yield every day, and then use that money to then speculate in other crypto projects, or just stick to bonds and use it as, a cash flow engine for your own reason. So there's just so many different ways that you can skin a cat, so to speak. But starting with bonds as your real backbone of your DeFi journey is just a no-brainer. And again, the numbers don't lie. I mean, if you go to the top, Christian, we paid out over right. Oh man, it might take over in the video. So $1.3 million over the last 9 months. You just can't argue with that. And it's all on chain and verifiable. So
I think the thing that I believe that people take what we have here for granted, AJ.
for sure,
With DEXFI, with DEXFI as a whole, meaning not only the bonds but also the vaults, but especially the bonds. And let me explain why. When life is all about perspective, right? Whether something good happens to you or bad happens to you, the way you react to it is going to affect how you live, especially when bad stuff happens to you. If you react to it in a way that just makes it even worse, or you carry on that feeling of, woe is me, or crap, why is this happening to me, blah blah blah, then you're gonna live a pretty much terrible life, in my opinion. And the reason I'm saying this is because the way I look at DexFi is, and especially the bonds, is probably a lot different than the average person watching this video. Let me explain. The average person watching this video probably just looks at this and is like, I can put crypto in, I could spend 40 bucks, 50 bucks, could mint a bond. It's going to make me some money per day. Great. I could put in 100 bucks, I could put more, and it'll make me more, blah, blah, blah. Great. In fact, that is actually not a bad view to have. But let me instill in you a different perspective or a different view of it. The way I look at this is, if I wanted to make a full-time income just off crypto alone, I could do it with just one product, one service from this website, and it's just the bonds. And the reason why I can say that is because if you think about, if you, for example, let's forget about that I own a business and that AJ owns a business and there's other business owners watching this video. Let's think about the people that work a regular 9 to 5 job, whether you work at McDonald's, whether you work at a corporate place and you punch a clock, whether you wash cars or whatever. The thing is you drive to work for that job, right? And you're not getting paid to drive to work. You're only getting paid for the hours that you clock in, right? So imagine this. How much money do you spend in gas every week to go to work? Some people might only spend 20, some people only spend 5, some people spend 100, some people even spend way more than that, all right? But if you think about it, if you come and deposit money in here, this is your money working for you. You're not spending gas to do it. You're not spending time to do it. None of those things that you traditionally do, you'll have to spend here to make money. That is insane, right? AJ, would you rather punch a clock, or would you rather invest some money in the bonds?
yeah, no doubt, Christian. Again, we joke about it all the time. On some of the other images, I know, those that know my story, I had a lot of experience in commercial real estate, and I know that I've never been able to earn what I can potentially earn in bonds, and not have to worry about tenants, calling and needing their toilets fixed. So again, I mean, obviously, risk tolerance is a little bit different. Obviously, I think it helps if you have an actual conviction in crypto. Some people think crypto is dead. I would solely disagree with that sentiment. And again, the reasons are numerous, but a big thing is AI. AI agents and the future of finance. We're not going to be transacting with paper money anymore. Everything is coming on chain. Crypto is really ultimately a game changer in finance. Whether you think that at the moment, maybe up for debate, but over a long time horizon, I think a lot of people would agree with that. And yeah, I agree 100%, Christian, in terms of the risk to reward ratio, and really just getting familiar with how bonds work. There really is no other better option that I know of in the space. And I've been building DeFi protocols for 10 years. So, again, all of that is really exciting for the future. And we're seeing this success, like I said earlier, when crypto is at an all-time low. I mean, again, we've been in some of the worst conditions of all time in crypto, and the numbers you see on the screen, they're not back-tested data. They are real, provable, verifiable, on-chain yield and metrics over the last, 9.5 months that you just can't argue with. So again, I wish that I had bonds, when I first started in crypto because I would have built, $1 million portfolio in bonds alone and just been, living on the sweet USDC rewards. And again, you're paid in USDC rewards. You're not paid in some other made up token. You're getting actual USDC hitting your wallet literally every, depending on how big of a position you have, it can be up to every second it accumulates in your wallet. So
Yeah, I agree. And I was just thinking when you're talking about the real estate and things like that, you know, this, of course, there's risk in crypto. There's risk investing in projects. Don't get me wrong. In fact, not financial advice. Do your own research. We're all just playing games here on the internet. But literally, in my opinion, going and investing in things like real estate, like if you're doing a flip, which I used to do, right? I used to do flips, and these are investments that could go wrong very fast. Or if the housing market turns, we could be at a multi-$100,000 loss, right? And we're putting hundreds of $1,000s on the line, for a down payment, and then there's the mortgage, and then all stuff. The point is that if I were to take $100,000 and I really had the conviction, like AJ said, I would put it in DEXFI because it's way less riskier than freaking flipping a house where you're not even promised that you're going to get a great return, right? There's just a lot more risk, in my opinion. This is my opinion. Now, another thing that came to mind while you were talking, AJ, was also, I talked about the 9 to 5 job, and I talked about the risk as I just did right now. But what about the people too that they're online business people? They're online entrepreneurs, like affiliate marketers or e-com, people selling t-shirts and mugs and all kind of stuff. Let me just bring this from another point of view that might give you this big aha. And I think this is really, really a great angle or a great way of understanding why this is just so easy, is because in any business, even offline, but especially online, the one thing you have to have no matter what is traffic, right? You got to have eyeballs on your offer, whether you're selling a mug, a t-shirt, whether you're selling an information course, whether you're selling any kind of affiliate product, you got to have traffic, right? The coolest thing about this is you don't need traffic because the way that the money is working is that you're basically making or minting these bonds, buying these bonds. That capital then goes into the fund value right here. And that fund value then actually gets to work in the different positions, which are basically the yield farms that basically look like this, but are in the private DEXFI vault, if you will, in the private areas of DEXFI, right? So to me, it's just like, man, if more people just knew about this, it would be insane because I believe they would be like, you know what? We don't need traffic, AJ. All we need is money.
yeah,
Even if we have a little money, let's just put a little in and start building it up and see how it goes.
yeah, no doubt, Christian. Again, some more great points from you. Just to go back a little bit and then I'll comment on what you just said. But yeah, in terms of real estate or flipping, or people think that there are other vehicles. I mean, typically in that you're also highly leveraged, meaning you're borrowing, you have a high mortgage, and it can go south really quickly when the market doesn't go right, or God forbid, there's a pipe that bursts, and now your flip turns into a black hole of a money pit. So again, everything is relative to the risk reward appetite, and yeah, obviously we're not by any means telling you to remortgage your house and put it into bonds, or put crypto on a credit card. That you should not be getting into bonds if you can't afford to pay your bills. So just let me again put that out there 100%. But again, there's a but. In terms of the other crypto projects, and even just what people think crypto really is, which is in fact more of a casino than anything, with high leverage and hoping for a moonshot. This is what institutional crypto dudes and crypto bros are doing. I mean, the BlackRocks, the crypto arm of Fidelity, these guys are actually putting large amounts of capital into LP providing, or some people may have heard market making, and those are the real ways to earn in crypto, by really mitigating a lot of the risk, and again treating it as a business that produces real yield, regardless of what the market does overall. So yeah, I think you made some really great points there, Christian. And again, getting involved and just seeing how it works will give you a much better understanding, and then it becomes sort of a no-brainer. Like once you really start seeing the flywheel, and that you're earning, and that you can then compound even some of your rewards into more bonds, it really becomes again this really unique system that we've never really been able to replicate or seen done well in crypto before. So all those things is what gets me excited for bonds, and honestly the longevity too. I mean, like you said, you know, a lot of times in business, right? We're reliant on new users, new volume. Always seeing the growth metrics happen. With bonds, obviously we need volume in the overall crypto market, meaning people are buying and selling Ethereum or Bitcoin or any of the other alts that we have exposure to. But that is really the only bottleneck of bonds. I mean, again, the money is always put to work as long as there is volume. And again, the proof is in the numbers, right? At all-time low sentiment and volume in crypto overall, we're still seeing incredible APR that some people don't even believe is true. Again, this is a great example right there. We're not necessarily in this pool, but that one right there, the first one, it's doing 1.2 or 1.6% daily. And so again, the numbers are absolutely insane when you think about comparing that to a brokerage account. But it really is possible. And again, obviously there is a little more existential factors. That 1.6% daily is not a guaranteed APR. It'll go up and it'll go down. But the whole idea is that bonds has exposure to over 50 different positions, that we absolutely can achieve an average of 50 to 100% APR over the long run. And we have been, again, no back tested data, all real results of what we're showing.
So I'm pulling up this chart, and I'm not sure if it's going to load because running a Zoom and all kinds of funky stuff going on here. But the reason why I brought up this chart for the vault that we were just talking about, um, the reason if you don't understand how the bonds work, or how DEXFI works as basically a whole, there and the vaults specifically, the way that money is being made is basically by the buying and selling of these different tokens or these different assets, right? So the one where it said 1.67 daily ROI, or daily percentage. So this one right here. So that's based off of the activity, the buying and selling activity, basically over a 24-hour period. And it's basically like a moving average. Like it's never static. Like, if this coin pumps, right, or the market pumps, and this volume right here that you see, 203K, that thing shoots to 400, for example, then most likely this daily percentage is going to double what it is right now. So and what's happening is because we're providing, this is called providing liquidity. That's what we're doing here in these vaults, and on this particular token right here, we're providing liquidity. Anytime a buy happens or a sell happens, we're getting paid, you know, a fee, or we're getting paid some money in order to provide basically liquidity, or provide money for this money being transacted. And it's insane. Like I can't, AJ, I still can't believe to this day that this is real and this is happening. But it's like, oh my gosh, like if you if you're just in the know, you're in the know. And if you're not, you are just missing out, my friend. That's all I gotta say.
Yeah, Christian, absolutely, brother. And this is a great example. Again, we may have exposure to this. I don't think we do though. But just hypothetically speaking, if we did, usually there's about anywhere from a 0.25 to a 1% fee when buying or selling a token like this. And that is again not a tax on the token itself, but a swap fee essentially on the DEX. So in that example, 203K, that means, LP providers are getting a cut of, roughly 2 to 3 grand just on this one pair alone, in the last 24 hours of real fees. So again, and our system is also really cool because maybe you don't care about Clanch. You never heard of that token and you hate it. Well, we convert that fee into USDC immediately. So you don't have to worry about a token you never heard of going up or down because we're taking profit in USDC immediately upon those fees being collected. And so that's another reason that bonds are able to outperform some even similar systems. Nobody, again, has the amount of options we have, but even if you're just providing liquidity on, say, Uniswap yourself, anybody can do that. But it's really hard to manage more than a couple of positions doing that. But you're going to be earning the actual assets. And if the market crashes, then you're screwed because now you lose a lot of those fees because you didn't swap it in time. And so again, just one more reason that DEXFI is the gold standard for LP providing.
And it's just crazy. And to prove how crazy this is, and here's some more tickets, here's some more alpha for you guys, okay? I go around and I just experiment, right? Especially with this wallet I'm logged into. This is just my experiment wallet, my tutorial wallet, right? So I just go around and I mess around, right? So I saw this vault right here. I don't know who made it, but I saw it at a high daily, right? And it has 100% profit, meaning it doesn't reinvest any of the profits, any of the fees it gets back into the token. It takes everything you make profit wise and gives it to you in USDC. So I said, interesting. So I deposited like $20 first, and then I'm like, you know what? I want to use this particular vault right here that's giving me USDC. I want to use it just for like gas money, not car gas, by the way, my friends. We're talking about crypto gas money. For
For
gas
sure.
money, for gas money, AJ, I have, you know, I got my Fortune 5 lotto ticket bought, my $2 one bought every week
That's
just
it,
on
bro.
just
Yeah,
on this vault
totally.
alone, bro. So and I'm not going to go into what Fortune 5 is, but look at my channel for the other videos. But essentially, what I'm saying is I put $40 in here. Um, Let me see when the last day I took that. I think I took the rewards like a couple days ago and put it back in here. Let's see. Today is the 25th. Oh, yesterday. So yesterday I put 512 back in there and it's already made me $1.41. So it's just like $43 deposited. It's making roughly 1.66% daily. So from the time I deposited yesterday into the vault, because I basically took the profits out of here, which is roughly $5 at 5:15:15. So that's 3:15 p.m. yesterday, which is around 24 hours ago. I made now $1.41, right? And so basically by the end of this
For
week or
sure.
by Friday, I'll definitely have $2 to go buy my Fortune 5 lotto ticket. So it's insane. So AJ,
Yeah.
okay, and I'm just showing you guys this. This was not even planned. I wanted to bring up the vaults to explain and give some context and some reference. But the other reason I really want to do this video, besides what we already talked about, we're gonna go back to the bonds here. Is because I had this question, and this question kind of came up because of a similar question I asked about Plasm the other day, AJ, which was in this reference of kind of like a compound to infinity idea. So the question is will this APR ever get like really higher than like 100 like will we ever see it like in 3 or 400% range? And the reason why I'm asking is because right now, because the market's low, we're actually booming kind of today, but overall the market's been low for the last couple months now. But the treasury or the fund has been really compounding back into the positions, into the capital to preserve and to basically build those positions. So let's say, for example, we hit a bull run, and let's just be way wild out there and say that this bull run happens in 2 years from now, but we've been building and preserving capital and compounding in back into these positions, and the bull run comes and it lasts 1 year. Let's just say, right? What is our APR going to jump to like 300%, or what's the deal? You see where I'm going with this question?
Yeah, no doubt, Christian. So there is a lot to unpack here. I'll try to be as clear and concise as I can be, and then ask me at the end to clarify anything as well. But yeah, so I think what you're asking is how crazy can the APR eventually get? And I want to say it's all relative. Okay, so to your point, yes, say that we are able to accumulate over the next year even. And we don't really get a bull run until the end of the year or next year. The APR, even if we're trending sideways, as long as there's volume and we're earning fees, the APR can stay pretty consistent. And we're going to roll out some more metrics on the average APR. And that's been roughly between 60 and 70% over the last 9 months. What you see displayed right now at roughly 90% APR, that is the current APR based on the exact bond price. So we display that APR in real time because again, we don't want to be having an accusation of like a bait and switch on what the APR could or couldn't be. So literally, if you minted a bond today, you'd be earning that 90% APR within 1 minute of getting in. So but that APR does fluctuate. So every Thursday we then top up the rewards that the LPs have been earning for the previous week. So the APR is never fixed. It's always variable, and it purely depends on the amount of volume that we did. So again, a good metric I showed earlier is up a little higher. You can see we're doing roughly 6 grand a day in profit. Half of that's compounded, and half of that is paid out as profit. So if those numbers are more than 3 grand, and again, that's on a $2.5 million fund value. So if we get to $5 million fund value, the daily profit and compound would theoretically double as well. And so yes, that would be a similar APR but now the numbers are just double, right? Because APR is basically a percentage, not a fixed rate. And so to answer the real question that you're asking, though, I think, Christian, which is so powerful, if you're buying bonds today because we're so suppressed and bonds, are a lot more affordable than they were, at the beginning. You'd mentioned, the first week bonds released, they were, about $250 each, or 0.01 ETH. I'm sorry, zero point 0, yeah. I'm sorry, zero point 0.1 ETH, in terms of the ETH ratio. And again, some people did mint, at that price, and unfortunately, with the market going down, they may be underwater in their principal. However, they've earned more in yield than if they would have been holding ETH in their wallet alone, which is really the value proposition of bonds to begin with. You're earning and still having exposure to overall crypto rather than just holding ETH in your wallet. And again, we can elaborate on that too, but I just want to finish my thought. So if you're buying bonds today, you are potentially getting upwards of 200 or 300% APR when principal balance doubles or triples from your entry price. So again, that APR is the current APR, but if you bought bonds at a lower cost basis, you could be earning way more than what is actually shown. So does that help, brother? I think that was all the points, but yeah, go ahead.
Yeah, it does. I guess one of the other questions it leads me to ask then is, you know, let's go back to this example of, we're in a down market for 1 or 2 years, and we've been building up capital, compounding back into it, building up these positions, and we hit a bull run, and let's just say, one of the positions really takes off and goes like really high, right? So I, and this might be private info. I don't know. You don't have to answer it, but maybe it's a secret, maybe it's not. I don't know. But let's say, for example, one of the positions, let's just say we'll use some just numbers just as example, so we could maybe just uh, do explaining a little better. Let's say, for example, one of the projects or one of the vaults that we're in privately in the fund has, let's say, $100,000 in it, right? We're not going to say which token that is. We're just going to say 100,000. And let's say that project, for whatever reason, during the
For
bull
sure.
run, 5x's. So it goes from 100,000 to 500,000. Is the fund or is DEXFI at some point selling selling some of that to take profit, if you will, and then putting it into the rewards pool, or is some of that profit going into other, to go used to into other projects that might be just starting up and now we're getting in at a low point?
Yeah, no doubt. So a great question, and yeah, happy to answer all this, and everything you're asking can be viewed on chain as well. But yeah, we never just sell a token or a position to pay for rewards. So we really are super strict about that, where we're really just using the yield to determine APR for the most part. Again, but to your point. Yes, what we would do is, and we're not actively trading the fund either. So there are still some stipulations to this. But just in your example, if we did see, a token just explode and 5x in a very short amount of time, then yeah, I mean, we would definitely sell some of that just back into ETH, to then get into another position at a lower cost basis. Or the flip side would be it depends, because if it does a 5x, but the volume is just ridiculous, doing millions of dollars a day in volume, then we would just stay in that position, because now we're our we would own so much of the LP at that point, and the volume would be crushing it, where and this is a great example. A few weeks ago, and a token that's a great analogy would be Banker. We had a lot of exposure to a token called Banker on Base, and a few weeks ago there was a big AI narrative shift with OpenClaw, agentic AI, and launching all these AI tokens through Banker. We were doing $20,000 a day in yield, and the majority of that was coming from Banker because the volume was like, $3 or $4 million in a 24-hour period. So, again, there is no, regimented answer. We just look at what makes sense, and what benefits not only the fund value, but then also the yield overall, because every decision that's made is with protecting principal balance. So you're never or you're hopefully never losing your principal balance. It may not go up quite a one-to-one with as if you just bought the token and held it on your own. But you're earning yield the whole way too. So again, it's a give and take. But we're always prioritizing principal preservation and high yields. So all the decisions are made with that in mind.
Gotcha. Okay, makes sense. Totally makes sense. Because I think otherwise, if you were constantly selling out of positions, when things did like a 2x, 5x, 10x, whatever, then that would really skew the APR and would make a lot of
For
people
sure.
upset because we wouldn't really have this kind of like stability of APR. We'd have like, maybe one week it's like, 50 and another week it's 150 or maybe 200 or whatever. And it's just like, that's when it's going to totally attract the Deegans for sure. So,
Yeah, totally. Yep.
so,
And
but
again, yeah, you hit the nail on the head. It's basically our APR is a blended average of all the different positions. And we very rarely want to exit positions because unless again, in your example, a 5x is pretty crazy. Maybe a 1 or 2x is a little more realistic. But we wouldn't want to basically have what we call dead capital, where, although we take a profit and that's amazing for the fund value, now we're not earning. So the capital is just sitting there, again, not earning or not being put to work, and then APR suffers dramatically when that happens. So
yeah, and I also believe AJ for a person that has a longer term strategy and longer term view, like like I do and like you do, and I'm sure some of the people who've been watching this video do, is that if you were to remove capital or sell at some point because of a 2x, let's say, then yeah, short term wise, we might be making, a lot of money that would be released back into the reward pool or into the APR. However, long term wise, and when I say long term, I'm like years long term, not like, months. So for me, it's like, well, if we are yielding every day and keeping these positions, that also means that since you guys are really the smart ones here running the show, that you know more about a lot of these other protocols than let's say I do. And so you might even have some information that you've been paying attention to in a Discord or a Telegram or their website or a YouTube video, whatever, that's like, hey, we're building this tech now, and in 1 year, that's when it's coming out, and it's going to change the world or it's going to change crypto. And all the time, DEXFI has been building a position there, right? And so as that time comes, once it comes and the token starts going crazy and there's a lot of buying and selling going on, a lot of transactions, that just basically means that the fees or the daily percentage is going to jump. Basically similar and not exactly what happened, but that's why I brought up Banker right here. But I remember Banker, AJ, when I first got into DEXFI, Banker, for lack of a better term or lack of a better example, was maybe doing 0.1, 0.2% per day. And when this whole AI narrative came out, as you said, with OpenCloud, it jumped from like 0.1, 0.2 to 1%, 2%, 2 point something percent, essentially overnight. And so I believe that's, like you said, you were making, what did you say you guys were making on yield just from banker in that one or 2 days?
Yeah, we were doing about 20 grand a day. Total. It's just insane. Yep.
And so,
Yep.
those
So,
rewards,
yeah,
yeah, and then those rewards, the split goes to pay, or goes into the users, to the people that invested in the bonds. So
exactly. Yeah,
yeah,
and
so
to just to elaborate on that too, Christian. I mean, yeah, it's we do. It's a full-time job, going through all the different LPs. And again, that's the cool part. Anybody that wants to do this on their own, and have self-custody of everything, our vaults allow you to do that. You can add any pair, any vault, as long as it's a chain that we support. You can do all that, but you have to be a pretty advanced crypto user to be able to research what LPs are paying the most, know what projects are up and coming, know the fundamentals. To your point, banker was definitely under the radar for a while. And we always prioritize protocols that maintain real yield. So again, even in some of the alt tokens, we're never just buying a meme token, even if the volume is amazing and the it has the brand recognition. Again, maybe a good example would be Doge. Everybody knows Doge, but it's a meme. There is no utility, there is no revenue, there is none of that. So even if the volume was amazing, we would probably never have exposure to Doge. Instead, we look at alts that have real revenue, and again, banker is exactly that. So again, it's about really looking at what makes sense. And as the fund grows, another really cool part of this, Christian, is we get more opportunities through that. So now we almost act as a VC fund, for lack of better comparison, where if we have $10 million in TVL that we can deploy, we get even more opportunities on solid projects that may come to light. And again, you've been around a while yourself, but maybe some of the viewers haven't. When we get a real bull run, that is when you can pretty much provide liquidity for anything. And you may gain. So again, when we do get a real bull run, the numbers could be absolutely insane. Considering that we're doing what we're doing now, in the depths of a bear market, all of those things are promising, for the future of bonds for sure.
100%, man. And I've been I've been here covering content. I've covered content before DEXFI, like several years back in the crypto, in the crypto game. Um, but I went through all my woes. I went through all my failures in crypto. Lost some money, blah blah blah, and then eventually I found AJ. And during that time, AJ was building, just like if you go to his channel, his EMP YouTube channel, and where he does his own AMAs with his own team and whatnot, you'll just see on every video, which is almost every Thursday, pretty much every AMA he's always talking about. We're continuing to build. We're still building. We haven't stopped. We're still going, right? And it was remarkable to me because I was, as a business owner myself, I've always been looking for people in anything that I do that I just feel are respectable, that are confident, and that really just like have their stuff together, and are not going to bail out on you or the community, right? And so I've been here since day one of when not DexFi launched, but when the bonds launched, and I can tell you that things have just gotten better and better and better and better. And I can only imagine what's going to happen, like with what AJ said, when there actually is a bull run, because the fund value is going to be astronomical. The APR most likely will increase, which basically means our payouts will increase. And then everybody will be making videos about why, get into DEXFI bonds. Why aren't you in bonds? You should have been here since day one, blah, blah, blah. And mind you, again, it's not a crypto coin. So this is not a meme token or anything like that. They're basically putting in money to supply into liquidity into the different vaults that DEXFi is in. And for that, you are getting rewarded with fees that basically drip out, depending on how many bonds you have, nearly every second. There are some people that have hundreds, and AJ, you could probably say that there's even someone that has thousands of bonds, and they make more than I would say $1 per minute. Like they could just log in and watch their thing go up like $1 per minute. There's people that in every hour, if not every day, will come into their DexFi account or log in through their wallet, and they'll see $40 and they could just mint a bond. Some people are minting bonds and compounding multiple every day back into their position or back into the treasury. It is insane.
Yeah, no doubt, Christian. Again, I want to respect some privacy, but yeah, I mean, I know at least two or three of our OGs that have, at least six figures into bonds, and they're earning, two, $300 a day, 24/7. Again, 365, man. So, when you extrapolate that out, it's just really powerful, man. And again, not something you're necessarily going to be getting in a mutual fund or even managing your own real estate. So yeah, I think and people are starting to get it, obviously, like we said, we've been building in the space a really long time now. And we've all seen, these things that come and go and may not be here more than a year. But we have learned from that, and again, we have that put that at literally the core of the thesis of making something that will be absolutely 100% sustainable, could be here for as long as crypto is a thing. Bonds will be profitable, and fully transparent. Again, you click that little button on the fund value, and it shows you all the on-chain transactions for those that care. And this is all debanked. We can't fake this even if we wanted to. Again, it's all on-chain data, shows where every single penny is and earns and moves. And again, this is what you should be expecting in crypto, not black boxes where people say, "Trust me, bro." So, really exciting for again the transparency and to hopefully give people their confidence in what we're doing. That it is again a real enterprise level DeFi protocol for sure.
And I'm going to end this video by giving AJ and DexFi a plug, which is if you think this overall concept of bonds is cool, maybe you watching this video right now, you have your own protocol, you have your own project, you have your own token, whatever it might be, and you have somewhat of a treasury built up. Maybe it's a couple thousand, maybe it's 10,000, maybe it's $100,000 in your treasury, and you want to put it to work. You want it to create money for you to help pump your coin, to help build your treasury, to help do things for your project. Bonds are the way. And the reason why I'm saying this is because AJ put his money where his mouth is, has created, let's see, Plasm, FortuneFi. Am I missing one? Um,
Yeah, Broke No Mo on Pulse, but yeah, same. Those are the big three. Yeah.
So basically, three projects that are utilizing the bonds to create mechanics and mechanisms that do multiple things. We're not. This is not a video about that, but basically, it does multiple things like buying and burning, building LP, building the treasury, et cetera, et cetera, et cetera. And it's just super exciting because really, this is hands off. And going back to what I was saying about this is easier than going to a job, or this is easier, this is better than spending gas money to go to a job. This is just so hands off. And that's what basically AJ has done. He is so smart in the sense that he has automated how several of his projects basically bring money in through the front end, buy bonds, and then have all these mechanisms, these mechanics that buy and burn the token, buy and build liquidity, and then also build the treasury in the end. And it is just so genius and it's so hands off. I mean, if AG had to do this all on his own, if he had to go to these vaults all on his own and do this for every one of his projects, he would have way more gray hairs than he has right now.
For sure, brother. Yeah, and it's so true, Christian. Anybody, again, whether you're utilizing it for your own benefit or you have a project, anybody can utilize vaults or the easy button of bonds to generate real yield to support their ecosystem. And obviously, our mothership with EMP Fusion, we do this as well. Again, the three that you mentioned. And we're always looking for people to build on top of bonds. And it's a no-brainer. And that will be the next wave. I mean, any protocol in 2026 going into the rest of crypto history, if you are involved in a token or project and they cannot answer where the yield comes from, it will fail. And I will go on record and say that publicly because the days of inflation and Ponzi like game theory is over, and you have got to have real yield and real utility. With whatever token or project it is that you have, and the cool part is we provide that, so there is no excuse that people say, well, we can't have real yield. This is how you do it. So,
Yeah, so if you're interested in learning how to integrate your protocol, your project, your token with the bonds, reach out to AJ directly. I'll put information below this video or leave a comment and we'll get you sorted. Because really, like AJ said, this is the future of how crypto is going to work, specifically in the DeFi space, or if you just have a project in general. I mean, there are so many good projects that really that if they just had the DEXFI bonds integrated with them, they'd be doing so much better, right? Because here's the thing, when a project's pumping or when people are seeing that the project's successful, that's when people start getting excited. And what AJ's been preaching about one of his projects called Plasm in particular is that we don't need, I'm paraphrasing him, we don't need any new users from this point on because the bonds are going to start working for us. Imagine you have a protocol where you need no more new users because the bonds is what is fueling the economic engine to create buy pressure in your token, liquidity for your token, and building up your treasury. That is magic.
I love it, man. I'm excited just listening to you recap it. So, and it is true, Christian. It's really where the magic lies. And when interest does return to crypto, I think that we are going to see some real fireworks with everything that we built and all the groundwork that we've laid over, the last 4 years. Like I said, I've been in the space now 10 years, but we've really been building vaults and all this DeFi infrastructure over the last four. And now we're at an amazing spot that it's all battle tested and ready for, mass adoption. And we'll get there. I mean, there's other DeFi protocols that don't have nearly the bells and whistles that we do with billions in TVL. So there is absolutely no reason that we can't get there, and we will get there. So excited to move forward, brother. And thank you for again helping us explain what it is we're doing. It's always a pleasure coming on the show, and really explaining to people what we have here for sure.
It's definitely special what you guys are doing, AJ. And again, thank you for spending some time with me on my channel and doing this video. Super appreciate you, brother. So let's sign off for now. just say goodbye, AJ, and we'll do another video soon.
All right, cheers, guys. We'll see everybody soon. Bye bye.